And you'd have to consider the wind direction too, wouldn't
you don't want to be doing this upwind.
No, because you get covered in pretend money, couldn't you?
Covered in what?
Pretend money.
No, this is not pretend money. This is real currency we're creating.
But aren't you just printing it off? I mean, these are photocopies, aren't they?
Hey everybody, Matty here with Altcoin Buzz. Happy Friday, TGIF. We're talking about the Bitcoin halving today. We'll get a counter take on that, which is the one of quantitative easing and how that is a broken model of the financial system that preceded the blockchain revolution. We're also then discussing Bitcoin derivatives from the perspective of Femex. But let's start with a look at the market today on coinmarketcap.com. $280 billion right now, up just a little bit, I suppose, from yesterday. Bitcoin up about a half a percentage point as our other projects, maybe a percent, 2% in some cases. Bitcoin right now at the time of this recording, $9,658. Dominance, as I mentioned lately, is a little bit higher than it was about a week or so ago, 62.8%. Stay tuned as well till the end of this video to learn how you can participate in tomorrow's giveaway of a CryptoTag Zeus starter kit. Let's discuss some interesting observations now about Bitcoin's halving as per Tarun Jaswani. Particularly, I want to skip ahead after the exposition to his thoughts on the stock-to-flow theories that have been proposed by analysts and individuals such as Plan B. So Tarun is a big fan because this model attempts to price the network value and was in fact used to even price in gold and other precious metals. So I would encourage you to read through. In simple terms, it attempts to find value of non-income generating assets, and the idea here is that the existing value of the asset is heavily correlated to the future supply of the asset. As with many things, supply and demand affects at least the perceived value of an asset collectively in the minds of the population. So the beauty of the theory is that it completely removes the demand side and focuses on just the supply. Surprisingly enough, gold and other precious metals seem to follow the pattern. I partially agree and will detail my thoughts further at the end. There's also the efficient market theory that comes into play here. According to this, financial markets are very efficient and market prices reflect all public relevant information. Why this is important in our context is because the information about halving has been made public well in advance and should have been priced in the current price levels. And there are a few different reasons here why this individual believes that we're going to see higher Bitcoin prices by the end of the year than what we're seeing today, something in the 10K range or so. Reason number one is that we have a frugal supply. So going forward, only 16% of the supply will be added in the next 10 years, with the annual inflation falling to less than 2%. The opposite of an efficient market theory is what you have when you introduce quantitative easing. We played a little bit of this video at the beginning to intro this particular segment today. Let's take a look at the rest of it now. It is, spoiler alert, totally satirical, but I think it makes a pretty poignant point.
Yeah. Now, right, there's a lot of uncertainty in world economics, isn't
there? There is a great deal of uncertainty and a lack of confidence. Yes.
Yeah, and there's a lot of talk of quantitative easing.
Quantitative
easing, that's a term we
yes.
hear all the time.
That's a term you hear a lot at the moment, yes.
Yeah, what exactly is quantitative easing?
Well, I can answer this because actually we're advising a couple of governments about this right at the moment.
And what are you saying to them?
Well, perhaps I should just take you through what we're telling them to do.
Yeah, sure.
I mean, I won't go into a lot of detail,
no,
that'd be indiscreet, but this will give you an idea of how quantitative easing works.
Yep.
Take printer out of box and place on table with the out tray facing the window.
The out tray facing the window.
That's right. Load paper into the paper receptacle and place currency on glass tray F.
Right.
Check alignment by printing out a test page.
Right.
Go into copy settings and select double-sided and the number of copies you require.
How many would you suggest?
In the case of one of our clients, it's 80 billion. 120 billion in the case of another client, and one client wants 1 trillion of these things.
Can you get printers to do that?
No, you can't. You're going to need a bank of them. I mean, it's a multi-printer
big
job.
Ones,
yeah, big industrial strength.
Yeah.
Big like a Bofors gun, all facing the window.
Yeah.
Once you've ascertained that you have the alignment correct, you alert the banking sector, open the window, and press copy.
And stand well back.
Yes, you've got to stand well back because they can create a bit of a vacuum while reaching cruising height.
Whereabouts?
In the super fund industry very often.
And you'd have to consider the wind direction too, wouldn't you?
You don't want to be doing this upwind.
No, because you get covered in pretend money, couldn't you?
Covered in what?
Pretend money.
No, this is not pretend money. This is real currency we're creating.
But aren't you just printing it off? I mean, these are photocopies, aren't they?
Excuse me. Dave, this is not going to work. Because I've just explained it to a bloke and he saw through it straight away. Are you in banking?
No.
No, he's not even in the banking racket. Okay, I'll try that.
Try what?
Have you ever heard of Rumpelstiltskin?
No.
Good. Now we're getting somewhere. Pull up a chair. I'll tell you a tale.
Quantitative easing is literally the opposites of the efficient markets hypothesis or theory, or at least ideology and philosophy. It's literally the idea of taking something that is not working and propping it up on financial life support systems to keep it going, to keep the can kicking it down the road for as long as possible to maintain the existing status quo and infrastructure. It is not sound mathematically or in any way financially speaking in any theory that you can think of. It's just a failed approach to a failed system that extends what is not efficient and not otherwise working. Finally, today we are discussing opportunities in Bitcoin derivatives and leverage trading and how to do it the right way. This article by Deepika, who says there is definitely optimism around crypto derivatives, but you got to make sure you know your platforms. Obviously, volatility is something that comes with this territory. It's something that seems to be almost built into the world of cryptocurrency. So it comes as no surprise when we see major fluctuations in the price of Bitcoin and especially altcoins in this space. However, there are ways that you can make money, that you can profit off of volatility, regardless of whether or not you're shorting something or longing something. Volatility in and of itself is a money-making opportunity if you know what you're doing. Deepika firstly talks here about risk mitigation, which is very important. And there are specifically two types of risks that need to be mitigated: the price fluctuation risk and the cryptocurrency risk. There were some services, there were some companies that were offering opportunities to make money, to profit off of some of the volatility, that were offering also risk mitigation services. So in that entire bucket, we're putting in companies like Ledger X, the Chicago Mercantile Exchange, CME, and the Chicago Board Options Exchange, CBOE. As you recall, they did come out with Bitcoin derivatives trading. However, it wasn't a perfect system. Here's the thing. The Ledger X primarily allowed only accredited investors and institutional players. And furthermore, CME and CBOE Bitcoin contract sizes, let's be honest, were really too big for everyday retail traders. And this is where a new generation of crypto derivatives trading platforms started mushrooming. And when putting all of our qualities together that we wanted to see in a robust and safe and secure derivatives trading platform, we came up with the following checklist. We wanted company transparency and credibility, of course. Product diversity in terms of the offering was also very important, as was the availability of a public testnet. And here's where Femex comes in specifically, because to our knowledge, it's the only system that comes with full capacity and velocity when it comes to this test feature. You can actually check out the Femex performance demo, as Deepika writes and links to in this article here. Other important qualities on this checklist are leverage, of course. Position handling is also important. Different types of margins are equally imperative, as is withdrawal flexibility and the right trading fees. There can be a lot of exorbitant fees. You're nickel and dimed for all kinds of things out there in the world of trading and finance. So the right set of trading fees is going to be something that goes a long way as far as a small detail, a variable. Settlement, currencies, and one-click stop loss, KYC, know your customer, of course. So in conclusion, as Deepika writes, the crypto derivatives market is a complex territory, and it can be difficult for novice traders to pocket profits. However, with a sound strategy and a top-notch trading platform, an investor can make potential profits. A small mistake can cost a lot in crypto. As extensively as we research the players in the space, we feel Femex is doing a pretty good job for both retail and institutional players. Now, this is not financial advice in any capacity, but if you want to check out the Femex website here, it is Femex, Phemex.com. We're going to link to it in the description below. And if you guys are interested, we have more information and more details that we can provide in future upcoming videos. That about wraps it up for today, everybody. Do be sure you're following us on all the regular social media channels and keep checking back into altcoinbuzz.io for all the latest. Go ahead, like, subscribe, share, and hit the bell to receive notifications if you've enjoyed today's video. Tomorrow we are giving away another CryptoTag Zeus starter kit. To participate in that giveaway, you got to make sure you're subscribed to Altcoin Buzz. You got to like videos and you got to comment on videos. Best of luck if you choose to enter that competition. Best of luck if you choose to invest on this Friday. Have a great end to your week, everybody. And as always, we do hope to see you again soon in our next video. Take care.